So you wanna go to war with me? You're talking like you think you're royalty. You think that I'm afraid, but I don't break. I heard you question my stability. You think I'll fall just like a guillotine, but I am here to stay. Won't look away. The storm is coming, so you better start running. No, you can't control, feel it in my bones. I'm coming for the, coming for the.
All right, sorry about the late start there, guys. I had one of my clients for one of my other businesses that had a late appointment. It's supposed to be done at 2:45, and here it is 3:15. All right, let's get started. I saw that IMAX already put out their results, so let's see what we got here, and then the call we're going to listen to will be starting in about 15 minutes. So let me make this a little bigger so we can read it. IMAX reports third quarter 2024 earnings, net income of $14 million, EPS of 26 cents. I saw that there had been forecasts out there of 27, so that is pretty close to estimates. Total EBITDA adjusted of $39 million. IMAX accelerates network growth and expects to deliver on full year installation guidance. Pull down the chat so I can, guys, chat. Can y'all hear me okay? It's been a while since I've been streaming on Streamlabs with the old traditional non-guest format. Sales activity, 100 new systems climbing, outpacing signings for 2023. They are highlighting Gladiator 2, Wicked, Moana 2, and Mufasa, all coming out here in Q4. You know, this is going to be a big finish to this quarter, starting in about 2 weeks. And IMAX expects to deliver a record of more than $1.2 billion in global box office on IMAX in 2025. A record IMAX. Just a recap, if you're just an AMC investor and you're not really following IMAX, about 1/3 of their income comes from movies, and then they also generate income from leasing out their filming equipment and installing. The rest of their income comes from leasing out the equipment, installing the IMAX theaters, and then all the maintenance contracts and the licensing on that. So they are not just movie dependent. They have multiple revenue streams. So let's see, revenue 91 million, it says. Gross margin 51 million, and we had net income of 14. Let's compare that here. Last quarter, so last quarter they had 86 million, got 91 now. Last quarter they had net income 3.5. So wow, that's a, if you're wondering why IMAX stock has been going up, big boost to earnings. Their EPS last quarter was 27, so they 4x'd their earnings. Sufyan, how you doing, amigo? Yankee, David, Tech We Love, YOLO Ono in the house. And I've got the call queued up here. We're waiting a few more minutes for that. Got the chart here. I do own some IMAX, just so we're all on the same page. Up, out. 30, 40% on IMAX. I'm got in IMAX back here in June. I wish I would have got back here in February, $13, but I'm in $15 on this dip. We're sitting at 2171 they closed at today. And while we were waiting on this call, I'm going to put the movie theater and GameStop up on the screen here, and then answer your questions for a few minutes. Yankee, how you doing? Yeah, no problem. Let me get my headset on so that we can all listen to the call together. Just kind of a chill. We might have a more fun live stream today. You know, this afternoon's just mostly going to be listening to the call. And then I imagine if I'm not going to a movie with the wife tonight, then Mediocre and I might be doing a live stream tonight to go over a lot more tickers. And I mean, DJT was crazy today. GameStop, obviously, we want to update the TA on that. I was watching AMC today when it was starting to top out at 462 or so. Looking at the level 2 data, I told the folks in the Discord this afternoon that's probably it for today. Because there were just millions of shares posted between 462 and 477. There was no way for AMC on, at that point, 4 or 5 million in volume that they were going to churn through all of that. So we'll see. GameStop, IMAX earnings today, Cinemark tomorrow. This will be kind of like a bellwether to let folks know what to expect for AMC into next week. We have here on the chart AMC in the top left, IMAX in the top right. They don't really have a lot of trading after hours. It's not a meme stock. It's mostly institutionally owned, so you'd have to really beat expectations, and it kind of came in at expectations for IMAX. It's obviously the run-ups happened in the last 4 months on the IMAX to get to where, the price where we would expect it to be on those kind of earnings. And GameStop down here in the bottom left at 2303. And we have Cinemark over here in the top right, bottom right. GameStop, did they open? Closed yesterday at 2270. All right, so they're still above yesterday's close, but we'll talk more about GameStop later tonight. I don't want to get distracted on that in this live stream, because this live stream is not about GameStop, but a lot to say. Great, get my headphones turned on. There we go. Tech We Love says, so quarter 3 to quarter 3, they did somewhat better than last year, but not as great as in other columns. We're talking about IMAX. Yeah, remember last year, Q1 and Q2 and Q3 were the good quarters, right? Let's review that. And same for AMC, right? Income, revenue. Q2 and Q3 were the good quarters in 2023. And they had, wow, 244 million. They had net income of only 12 million. And so they beat that on lower revenue. IMAX did. I don't remember what generated all this revenue, but that looks like a bit of an anomaly. Correct? Is that right? All right, no, it wasn't right. 101 million. Sorry, I had to refresh. So they were a little bit lower on revenue for Q3, but higher on net income. Big Ads, how you doing, brother? Gamers, yeah, I think I answered your question. Tech We Love says IMAX did. Oh yeah, I haven't dug into the breakdown. Guess we can look at that while we burn off these next 5 minutes. So here's the breakdown compared Q3 2024 to Q3 2023. $99 million on content solutions versus 107. Technology products 152 in 2024 versus 171. See if they have a breakout by region on this. System signings 16 versus 20. System installs way up 49 versus 30. System backlog, look at that. That's just crazy to me. 472. All right, so their revenue comes from these main buckets: technology sales, image enhancement and maintenance, and then technology rentals. Balance sheet for IMAX, I was looking at that before we came on live. They have a great balance sheet. Positive shareholders equity, positive working capital. They do have some debt, a couple $100 million, but not crazy. Let's hear what they have to say in just about 3 minutes. Sufyan says, hopefully we get our price by the end of the year. Yeah, I see a lot of people on Twitter saying, why are Cinemark and IMAX running and not AMC? Hopefully by now, you guys, that are watching this channel got all this stuff figured out, or you've gravitated here because you already understand it. Your price of your stock is, in its most simple formula, we're going to say it's going to come from expectation of future earnings. And the first hurdle you got to jump is you got to have positive earnings forecast for the next 12 months, your forward EPS. And AMC is not quite there yet in everybody's mind that it's 100% certainty that they're going to have the next 12 months positive. Maybe they will, we'll find out. But IMAX and Cinemark, it's, based on what we know about the box office, it's a slam dunk that they're going to be not only positive on net earnings, but IMAX is growing. And I don't remember the story on Cinemark's growth. Well, I'll I'll go back and watch my video from 3 months ago on Cinemark. I don't really track them other than doing these quarterly reviews. But they don't have to worry about dilution. They don't have to worry about a balance sheet being fundamentally broken. AMC still in the repair process. So we just can't get frustrated trying to compare AMC to Cinemark and IMAX. We're changing the spare tire onto the driver's side rear axle while we're driving until we got all 4 good tires on the car. Don't frustrate yourself trying to compare these other 2 companies, Cinemark and IMAX, to AMC. It will be frustrating because it's not frustrating if you understand where price targets come from, but people say, well, I don't understand. AMC has more revenue. Why isn't the price $20? Because earnings. Let's see. We still have music here. Still have music. Kristen Larson says, nice to see you live. Did you see a filing for BlackRock buying a good chunk of AMC? I did. Yeah. And, there are certain institutions which I say temper your expectations, like Vanguard. BlackRock is a little more interesting to me. Vanguard, I say temper your expectations because most of their shares are invested in ETF funds. BlackRock has some ETFs, but it's not 100%. So they own some of those shares. Like as far as I can tell, they're speculating. And so I like that. And there will become a point, guys, where institutions own more AMC than retail. That day is coming. And that's kind of like your green flag. It'll happen before you know it's happening. And one day you're going to wake up and you're going to be like, oh my gosh, the institutions own more than us now. You'll also, I think, know that that's happening because the price will be going up. And that when the balance sheet's fixed and the positive income looks like a lock, the institutions will start piling back into AMC. Maybe BlackRock's being a little bit early. Yeah, I saw that and I like it. But I didn't make a video about it because it's still too early to get people hyped up about institutions. But I can promise you that if AMC fixes their issues, you will see institutional ownership similar to Cinemark and the price go up far above where they're at right now. What is the deal with this call? Running late. Gamer says, oh wait, let me get these in order. Urus says, can you extrapolate IMAX revenue increase and apply to possible AMC earnings? That is a great suggestion. And I haven't done that, but I bet we could, right? We have enough data points going back that I probably could, like, take 3, 5, 10 years of data and do some sort of extrapolation to AMC's income. I haven't done that, but I like the suggestion, and I'll try and do that before November 6th. I like that. Second. Amazon. All right. Moana 2 may be the inside out 2 of Q4 Tech We Love says, I hope so. Got a lot of good movies. Moana 2, Mufasa, I'm excited about, and a lot of the buzz is about Wicked. Gladiator 2, I think, is going to be the big unknown. I'm hearing good things. Pre-sales are looking good, but is it going to dominate and far exceed expectations? Are people ready for a good bloody Coliseum fight? Been a while since we've had one.
These forward-looking statements
All right,
are
we got
subject
the
to
call
risks and uncertainties
going,
that
so
could
I'm going to
cause
mute
our
my
actual
mic.
future results to not occur or occurrences to differ. Please refer to our SEC filings for a more detailed discussion of some of the factors that could affect our future results and outcomes. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information, future events, or otherwise. During today's call, references may be made to certain non-GAAP financial measures. Discussion of management's use of these measures and the definition of these measures, as well as the reconciliation to non-GAAP financial measures, are contained in this afternoon's press release and our earnings materials, which are available on the Investor Relations page of our website at IMAX.com. With that, let me now turn the call over to Mr. Richard Gelfond. Rich?
Thanks, Jennifer, and thanks everyone for joining today. IMAX is setting the table for what we believe to be a new sustained era of growth over the next several years. Moviegoing has rebounded after the Hollywood strikes ahead of a phenomenal slate in 2025 and 2026. Exhibitor demand for IMAX is surging, with system sales and installations significantly outpacing 2023. We expect 2025 to be our best year ever at the global box office, with more than $1.2 billion in IMAX grosses worldwide. The fundamental measures of growth in our business, system installations, signings, and the content pipeline are all strong, and this came to the fore in the third quarter. We beat consensus estimates with adjusted EBITDA of $39 million at a 42% margin and EPS of 35 cents, beating the street by over 50%. We've already installed 100 systems worldwide year to date, including one of our best third quarters ever. We are now tracking to hit the high end of our installation guidance, which we raised last quarter to between 130 and 150 systems this year. We signed agreements for 119 IMAX systems worldwide year to date, on track to deliver more than the 129 we completed in 2023. We delivered one of our best third quarters ever at the global box office, driven by domestic box office that exceeded 2019 by 45%. These results are noteworthy given the tough comp versus Oppenheimer in 2023 Q3. Network expansion offset box office softness, further demonstrating our diversified revenue base and flexible asset-light business model. More than anything, we're focused on the future. The 25 and 26 slates look as strong as we've ever seen, with releases from the biggest filmmakers and most successful franchises, from Avatar to Avengers. 2025 alone boasts at least 14 film for IMAX releases worldwide, Hollywood and local language films shot without cameras, specifically for our screens. We typically index much higher with these titles. And as reported, we're very excited to be working with our long-standing partners, Christopher Nolan and Emma Thomas, on the release of their next film in July 2026. I'm pleased to share that Chris will be utilizing new IMAX technology in the making of the film, never before used equipment that our teams have been developing throughout this past year. As filmmakers and studios lean into our technology, moviegoers worldwide drive our global box office and market share, and exhibitors install more of our systems to meet consumer demand. An influx of great content will only accelerate these trends, and we look forward to executing to deliver results for our business and our shareholders. Today, I'd like to offer updates on the opportunity we see ahead in our global network and our content slate. Then I'll hand it over to Natasha before we both take your questions. First, momentum continued to build in our global network, with strong installations and sales activity in the third quarter. We completed 49 installations in the third quarter alone, compared to 30 for the same period in 2023. And we made progress in priority markets around the world, with signings in France, Australia, and Saudi Arabia. Our recent agreement with Movie, Saudi Arabia's largest exhibitor, puts us in business with the 4 top exhibitors in the kingdom. Saudi moviegoers continue to embrace a variety of IMAX content, from Oppenheimer to Bad Boys 4 to Indian and Japanese titles. And we are pursuing our first local language project in Saudi, which will make the IMAX platform even more attractive to local exhibitors. We see an opportunity to expand IMAX's Saudi footprint from the 10 currently in operation to at least 50 in the years ahead. Around the world, conversations with existing and new exhibition partners are robust. Already in the fourth quarter, we've completed agreements with partners in Australia, Japan, and Latin America. And in the wake of our landmark deal with Wanda Film, we're seeing encouraging signs of progress at the Chinese box office. China has lagged the rest of the world in 2024, but as we look ahead, we have reason for optimism. Next year's Hollywood slate is more consistent with the diversity of tentpoles and franchises that have historically resonated with Chinese audiences. As demonstrated by this weekend's Venom: The Last Dance and Alien: Romulus, which delivered greater IMAX box office in China than it did in the U.S., there is still a market for distinctive Hollywood films there. Our local language slate next year looks promising, starting with Chinese New Year, which is set to feature big blockbuster titles initially slated for this year. And China is in the process of rolling out an economic stimulus package to bolster consumer confidence in the economy. We saw progress during the October national holiday, where our daily box office returns and market share grew year over year, despite a relatively soft slate. China also offers fertile testing ground as we open our aperture with new IMAX events and experiences. We are live streaming the 2024 League of Legends World Championship, an online multiplayer battle video game, which is among the world's largest esports across more than 70 IMAX locations in China. League of Legends is published by Tencent-owned Riot Games, and Tencent is also a major investor in Rui Holdings, our partners that own Wanda Film. Our streaming and consumer technology division is testing a new proprietary technology with the potential to rapidly expand our connected live network without the considerable CapEx necessary to wire our locations. We successfully tested this technology with our sellout presentation of the NBA Finals in Hong Kong and Taiwan earlier this year, and we see an opportunity to efficiently scale our global connected network, and will continue to explore unique live events as we enter the new year. We're seeing strong momentum across our content portfolio and pipeline. While many initially tagged 2024 as a recovery year, the global box office is showing encouraging signs of progress sooner than many anticipated. We delivered more than $83 million with Deadpool and Wolverine alone. That's more than 50% better than any previous installment in the franchise, and good for our 5th highest Marvel title of all time. Last weekend's Venom: The Last Dance, a film for IMAX release, delivered a strong international opening led by China, resulting in one of our best ever October debuts globally. And we strategically managed our network to accommodate a diverse, promising slate of tentpoles this Thanksgiving and through the holidays, including Gladiator 2, Wicked, Moana 2, and Mufasa: The Lion King. It's a great on-ramp for what looks set to be a very special year ahead. Every IMAX release currently scheduled from May through September is filmed with IMAX cameras. That includes Mission Impossible 8, Marvel's Thunderbolts, F1, and Superman Legacy. The strong, consistent slate concludes with Avatar 3, the follow-up to our highest grossing films of all time. 2026 hits off with Avatar carryover and includes new installments of major franchises, including Avengers, Star Wars, The Batman, Super Mario Bros., and Toy Story, alongside our expanding portfolio of local language, documentaries, and events. IMAX powers awe-inspiring experiences. We are opening our content aperture to deliver new experiences for our audiences and drive capacity utilization of our network. We've recently hired our first Chief Content Officer to coordinate our content portfolio across Hollywood, local language, docs, live, and new events and experiences, and fine-tune our strategy as our portfolio grows to more than 100 experiences per year. We've had successes this year with a more consistent pipeline of experiences beyond first-run theatrical releases, nearly quadruple the output of the previous year. That includes a balanced mix of music, including Queen Rock's Montreal, and a recent concert hit in South Korea, I Am Hero, which is now our highest grossing local language title of any kind in that market. Documentaries, both originals like Blue Angels and through distribution partnership with companies including Netflix and Nat Geo, as well as library content events, most notably our partnership with A24 to release one of their iconic films each month during an underutilized weekday. We also continue to push the envelope in experimentation with new experiences, like the Paris Olympics opening ceremony and League of Legends. We remain in talks with NBC Universal on additional sports and entertainment events, as well as tonight's launch event of Amazon Prime's new concert film with hip-hop artist Megan Thee Stallion, which builds on our successful launch of Prime's hit series Fallout earlier this year. To close, we are building momentum at the right time for our business, with our system installations and sales activity ahead of expectations years to date, and a 2024 slate that on balance has delivered. Consumers continue to prove that. When there are awe-inspiring events that fully capitalize on the IMAX experience, they will show up, and we have a fuller, more promising slate over the next 2 years and beyond than we've ever seen. We continue to believe we are entering a very exciting time for our business, and we look forward to continuing to deliver results in our business and for our shareholders. Thank you again, and with that, I'll turn it over to Natasha.
Thanks, Rich, and good afternoon, everyone. Q3 demonstrated once again the resiliency in our business as we delivered strong results while managing through some top-line headwinds, including the challenging compare to last year's record Oppenheimer performance. Adjusted EBITDA came in at $39 million and a margin of 42%, above our high 30% full-year guidance. System installations are accelerating and outpacing our normal seasonality, with 49 systems in the quarter, an increase of 63% year over year. As a result, installations are now tracking to come in at the high end of our full-year guidance range of 130 to 150 systems, as Rich highlighted. At the same time, profitability and cash flows remain strong. We delivered EPS of 26 cents, an increase of 18% year over year, and operating cash flows of $35 million, an increase of 21% year over year. Overall, our results reflected our growing business momentum and management's continued focus on efficiencies and operating expense reductions. Looking forward, the table is set for accelerating revenue and profitability from the combination of our growing network footprint and an improving Hollywood and local language box office slate. In addition to expecting over $1.2 billion in IMAX box office in 2025, we also expect our box office to continue this upward growth trajectory over the next several years, given our strong position in the industry, the promising Hollywood box office slate that we either have scheduled or have visibility into, as well as our expected network growth. The bottom line picture improves further as the operating leverage that comes with higher box office and scale increases. And we look to increase utilization by bringing other content onto our platform and deploying more digital marketing initiatives while also working to scale our streaming consumer and technology business. As Rich indicated, we are entering a very exciting time for our business, and I would add, for our financial growth prospects. To recap our Q3 performance, results on most measures came in ahead of consensus expectations and reflect good execution by the team. We delivered revenue of $91.5 million. Within that, Content Solutions revenues of $30 million reflects our third highest Q3 box office of all time on various tentpole content. Both Deadpool and Wolverine and Alien Romulus delivered the highest IMAX opening weekend box office in their respective franchise history. And in China, while Hollywood film performance has been uneven, we have captured on average a 16% share of box office across Hollywood titles year to date, including Alien Romulus and Godzilla Kong, where both titles delivered more IMAX box office in China than in domestic or rest of world. Year-over-year revenues from Content Solutions declined 32%, driven by the mix of content and the compared to the prior year that was powered by the record-setting box office from Oppenheimer. Turning to Technology Products and Services, revenue of $58 million grew 3%, driven by strong system installation growth that more than offset the lower box office-related rental revenues resulting from the global content mix. Overall, system installations and signings both provide insight to the strong demand we are experiencing in advance of the highly anticipated 2025 and 2026 box office slates, which we anticipate will drive our network growth further. During the quarter, we completed 49 system installations, up 63% over Q3 2023, which puts us at 88 installations year-to-date September, a growth of 49% year-over-year. As of today, we have completed over 100 system installations. Signings to date are up to 119 through yesterday, on track to exceed the 129 of full year 2023. Within new system signings, the mix continues to lead towards rest of world, comprising 67% of the Q3 year-to-date new system signings. Gross margin of 56% was below the prior year of 60%, given the lower box office compared to the record-setting Oppenheimer-fueled quarter of 2023. However, we had good results across expense areas that offset this headwind or challenging compare. SG&A excluding stock-based compensation was $26 million, a 16% improvement year-over-year, driven by benefits from our ongoing expense initiatives, as well as timing of expenses and other certain adjustments. R&D was also better year-over-year, reflecting the capitalization of the investment into our new state-of-the-art film cameras, which have moved out of development upon achieving technical feasibility. In addition, bad debt provisions improved year-over-year, reflecting improvements in working capital, specifically collections from exhibition customers, that also helped propel us to a good cash flow result. Overall, the third quarter total consolidated adjusted EBITDA of $39 million was at a strong 42% margin, particularly considering the mix of content in the quarter. Lastly, adjusted EPS for the quarter was 35 cents, consistent with last year's same quarter record. Within that, Q3 adjusted tax rate was 13%, which is below our mid-20s statutory rate, driven by the jurisdictional mix of profits that led to a decrease in our valuation allowance. This result reflects the benefits of the actions we took last quarter, which has led in part to an improvement in our effective tax rate in 2024 relative to prior years. Turning to cash flow in the balance sheet, we had strong operating cash flow in Q3 of $35 million, up 21% from the prior year, leading to $59 million through 9 months, a growth of 9% year-over-year, and already equaling 2023's full-year operating cash flow. I am pleased to see the continued progress and growth in our cash flows. The higher year-over-year operating cash flow reflects an improvement in working capital, including an increase in collections. Our capital position remains very strong at $105 million in cash and $280 million of debt, excluding deferred financing costs. As a reminder, $230 million of our debt comes from our convertible senior notes due in 2026 that bear an interest rate of 0.5% per annum with a capped call leading to a $37 per share conversion price. Our current available liquidity is over $410 million, which includes $309 million in available borrowing capacity under the company's various revolving facilities. While we are building up our cash and liquidity positions, we are also using our available capital to invest in the business, having spent $30 million on CapEx year to date, with $22 million of that in growth CapEx. This will continue in Q4, our historically highest growth CapEx period, given the higher weighting of system installations to the end of the year. We view this positively, as it will strengthen our ability to achieve higher levels of box office and in turn revenue incrementality, particularly as we head into the next several years with good visibility into what is expected to be strong content slates. And we continue to focus on more direct shareholder returns, having done $18 million in IMAX share repurchases year to date, including IMAX China. Repurchases were weighted toward the first quarter when our share price was significantly pressured following the Hollywood strikes. To conclude, our moat has never been as wide or deep. Our global scale is unmatched and growing. Our relationships with studios and filmmakers have never been stronger, and varied content available for distribution on our platform has never been greater and is expanding, and our technology solution for exhibitors is unequaled. Our accelerating signings and installation growth, driven by the demand for the IMAX experience by consumers, reflects our position of strength as we enter this extremely promising box office period. At the same time, we continue to see opportunity in new revenue streams to contribute to our growth and drive greater capacity utilization of our global network, especially when you consider that 1 point of utilization can drive $75 to $100 million in additional box office. Given the strength of our business model, the tailwinds in the market, and our focus on executing on the opportunities before us, we continue to believe IMAX is poised to deliver strong growth, expanding margins, and increased cash flow for years to come. With that, I will turn the call over to the operator for Q&A.
Thank you. At this time, we will conduct a question and answer session. As a reminder, to ask a question, you will need to press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. Please stand by while we compile the Q&A roster. Our first question comes from Eric Handler with Roth Capital. Eric, please go ahead with your question.
Thank you very much, and good afternoon. Rich, it's no surprise, at least to theater operators, that the content cycle looks really good for the next 2 years. But even with that being known, as we get closer to next year, are you starting to get more phone calls from these theater operators that they'd like to maybe accelerate the installation pace for your systems?
I mean, Eric, I think you could look at the empirical data where this last quarter we had significantly more installs than a year ago, and even our guidance on the call today where we guided to the upper end of the range. So, I wouldn't get the phone calls, but I certainly read the data, and the data shows that that's true. And on the other hand, as you saw, our signings are likely to run higher than last year. So also there seems to be an increased pickup in signings. So I think just based on the results we reported today, that's true.
Okay. And then I'm sure you saw in the news earlier this week a comment, and it was Bloomberg had it, that you're talking to Netflix about maybe doing an exclusive with the Narnia movie that's being made there. Wonder if is there anything you could say with regards to that movie, or just maybe how you're conversations are going these days with streamers and what they're trying to do.
I must have missed that story, Eric. Sorry, I didn't see it. In fact, as you know, directors, filmmakers, studios are all leaning into the IMAX experience in a, kind of another level than we've seen before. And as you know as well, we've tried different models in the past, whether it's early release or exclusive content or all kinds of things. So I won't comment on that specific story in any way, but I would say that we're always innovating and always looking for new approaches to eventicizing content. Thank you.
Stand by for our next question. Our next question comes from Chad Binion with McGuire. Chad, go ahead.
Yep. Thank you very much. Thanks for taking my question. Nice results. You've noted the healthy number of films for 25 with IMAX DNA and obviously your global box office outlook. Can you talk a little bit more about the spacing of 25, given that IMAX DNA have a slightly longer runtime, and then also related, how does the slate look in China in 25? Anything worthwhile to note there? Thank you.
Sure. So you're quite right. It's a little bit of an embarrassment of riches. Between May and September, the end of September, we don't have any slots available. Every single slot is filled. And for the year, it's as tight as I've ever seen it in terms of available times. That's a high-class problem. As you mentioned, a lot of the films were made with IMAX cameras, with IMAX DNA. As a matter of fact, next year, 14 of our films were shot with IMAX cameras, and a number internationally too, not just domestically. Also, when you look at 26, to the extent a number have been announced already, it's incredibly encouraging. And I think if you wanted to look at a trend that I've seen develop in the last 6 months or a year, it's that people are discussing movies way farther out than they did years ago. So as a matter of fact, for 27 and even 28, we've been approached about a lot of high-profile films. So I think studios and filmmakers are understanding that it's IMAX release is kind of like beachfront property. If you want to reserve a place, you've really got to do it very early. And we talk a lot about our theater backlog and what that means about future earnings. We don't talk as much about our film backlog and what that means for future earnings. But I think as you look out into the future and you talk about discounting future cash flows, to the extent there's more certainty in terms of our theater backlog and our film backlog, you should imply a lower discount rate, and that's a very good thing for our business. I think that's one reason that we're so optimistic. And in China, we've just heard about a number of films that have been approved to get in. As a matter of fact, right before this call, Natasha was mentioning some of them to me, so I'm going to turn it over to her to see if she has some of those names.
Hi, Chad. Yeah, so we actually, in addition to the Hollywood, so you think about the strength of the Hollywood slate and those getting in, which this year most of them got into China. On top of that, Creation of the Gods Part 2 has been approved for Chinese New Year, as well A Writer's Odyssey, which is filmed for IMAX into the summer section of the year. And there's a few more also that have been announced. So I think that that's good visibility. I mean, it's pretty early for Chinese New Year titles to get announced, and I think that gives us the essentially the confidence that China will provide a more balanced genre slate next year.
Great. Thank you very much, both. And then thinking about higher box office revenues in 25, Natasha, I know you've given some margin targets for the overall business. I think in the high 30s. Year to date, you're at 39.2. Can you just kind of help us think about the operating leverage in the content solutions, business, or both businesses for that matter, if the box office delivers as expected for 25? Thank you.
Sure, Chad. I mean, you're very familiar with our model, so you know that when we start to hit very high levels of box office, anywhere 250 plus, then you start to experience incrementality into our model. And so that box office, not only are we receiving payment from the studios, but then obviously from exhibitors as well for the performance of our locations. And so that creates the incrementality in the model. And then you couple that with the mix of our installations that we do throughout the year, which, as we mentioned in our prepared remarks, our installations are tracking stronger this year, and we're guiding towards the higher end of the range. And so a larger system footprint also will give us that higher box office performance as well. And I think you couple that together with the way that we've been managing the business from an operational perspective, and that's where you start to think about how the EBITDA margins can continue to grow and exceed over the 40% mark.
Thank you very much.
Stand by for our next question. Our next question comes from David Karnovsky of JP Morgan. David, go ahead with your question.
Thank you. Rich, I wanted to see if you could expand a bit on the recent performance of IMAX in China, and maybe there's just the exhibition there generally. It looks like your numbers and maybe the wider industry was down over 40% in the recent quarter over the summer. Is this economic? Is this film quality? Are there other kind of factors? I don't know. What are you hearing from, your staff on the ground there?
Yes, I think it's a combination of things, David. So obviously the economy overall has been, pretty weak this year in China. And you noticed recently the new government measures that have taken effect, monetary policy towards the real estate sector, fiscal policy. And, again, it's hard enough to predict a company, let alone a country. But it looks like some of these things, certainly are designed to focus on the consumer. As box office in the movie business is very important to the Chinese government because almost all of the 80,000 screens, or a lot of them, anchor big real estate developments. And I think one of the focuses of the government is to get people, to go to malls and to do shopping and help the domestic economy. So clearly that was one part of it, as I think Natasha said before, that the kinds of films being released and how close they were or weren't to the IMAX genre played a role. I still think there's a little bit of a COVID hangover because a lot of the films were released in 23, but less films were released in 24. On the bright side, a lot of films that you wouldn't have expected to get into China, like Deadpool and like Joker, which I just don't fit the typically more conservative profile I've gotten in. So I think that's a signal that the government wants more films in, and it's part of their overall policy. And as Natasha just said a minute ago, they've dated a lot of local language films for next year, which they don't typically do that far out. So, predicting movies like predicting stocks, not a very exact science. But we're just in the process of going through our budget, but when we look at next year compared to this year, we think it will be significantly better than this year.
Okay. And then, Natasha, the SG&A is noted down 16% in the quarter. I think you called out some timing benefits. I don't know if you can quantify those so we can get a sense of more of the underlying rate. And then just any guidance, try to think about that R&D line kind of going forward. I wouldn't expect it to be negative on a go-forward basis.
Hi, David. Yeah, so the R&D, I'll address that first. You're correct. It wouldn't be negative on a go-forward basis. We typically do have R&D expense on each quarter. So for your run rates, if you think about them, I would be looking at an expense. And essentially, we just did our annual assessment of technical feasibility on our film camera project, and we achieved the milestones needed. And that's why you saw the credit in the quarter. When you're looking at SG&A, we actually had year over year, last year we had the over $3 million of the transaction costs related to the privatization, and so China privatization, and so that's really what you're seeing in most of the variance year over year. So when you're thinking through a run rate, I mean, our historical run rate is pretty predictive of the future. I wouldn't be thinking of it in any different manner, but I think we've gotten some real wins on the operational efficiency side, and then timing of expenditures. There's still another quarter to go in the year, and so timing of expenditures, sometimes we delay some of our expenditures on consultants or fees or marketing, and see where we're landing for the year, because we have the opportunity to make decisions that'll help us strengthen our financials as we look year over year.
Thank you.
Stand by for our next question. Our next question comes from Omar Macias with Wells Fargo. Omar, go ahead with your question.
Good evening, and thank you for taking my question. Rich, maybe first, I noticed you guys kept the 2024 IMAX box office unchanged at flat year over year, despite 3Q being impacted by China weakness and 4Q off to a slow start with Joker and Venom. Are you guys still confident on achieving this guidance? And if there's any films that you're excited in 4Q that could potentially offset the slower start?
Yeah, I mean, this is the third time I've said it. It's the movie business. It's pretty hard to predict where things are going to come out. But when you look at the year going forward, we are incredibly excited about the Thanksgiving period around that. We've got Gladiator and Wicked and Moana 2, and Wicked came out of the box really strong with pre-sales, which is not surprising. There's a wide following for that IP. As you know, the show has played for a decade, and it's the kind of property people had circled on their calendar and came out and bought a lot of tickets. And then Gladiator has taken a little while to catch up, but actually it's really come on strong recently. And, it stars Denzel Washington, and it's big. The early buzz on it is extremely good. The subject matter is very conducive to IMAX, and we're leaning in pretty hard on that, as is Paramount. So the studio that's leaning into the IMAX of it all. And then Moana, some people think that's going to be one of the highest grossing movies of the year. So we have the ability around Thanksgiving in our programming to some extent, with which movies are working and which aren't. You only commit typically for the first week or maybe 2 weeks. So I think that flexibility gives us a very good feeling about what's going on around the Thanksgiving time. All the time there are movies that don't work. But this time, out of that group, I'm quite confident that period is going to be very strong for us. And then at the end of the year, you have Mufasa, and we have precedent for that. So we can see what The Lion King did, and typically in IMAX, there are pretty good numbers coming out of that. So, with that said, you're just not sure where it's going to end up, but we feel pretty good about our slate for the rest of the year.
That's very helpful. And Natasha, you mentioned improvements to capacity utilization across your system. Can you elaborate some of the internal initiatives that you guys have put in place to drive utilization higher? What's the opportunity set from a percentage standpoint at IMAX over the next few years? Thanks.
Sure, Omar. So we've been talking about alternative content for quite some time, and we've actually made a lot of traction this year over prior years. And the team's been put together in a way that they are synergistically working among the organization and within the organization, which I think earlier this year we talked about the fact that we made some restructurings and team changes in order to create that efficiency in the organization. And so that team has been working really hard on, not only you saw the Blue Angels doc earlier this year, but then we've done lots of alternative content between the concert films and moving into sports. This week we're doing League of Legends as well, which is new, and in China, and actually China's in the finals against a Korean team. And so I think we're looking at about the ability to do about 150 locations. And so thinking about what are all those opportunities, and when you pull them together, coupled with different models. So not everything will be straight box office, getting the ability to say, okay, do you do flat fee deals as well, and other types of models to make sure in the end, regardless of where box office is, you're still strengthening your financials and giving yourself other opportunities to create returns. And so using those initiatives, I think that's where we'll continue to spend time. And then, of course, you would have heard in Richard's remarks as well that we've hired a chief content officer, and that position is essentially to set the strategy for how do we create opportunities for ourselves on the content side and really make an impact on that side. Rich?
Homer, I'd also like to add, we're out in LA now, that it's hard for me to see people who don't say, wow, what about the Sphere? Wow, what about Cosm? Isn't amazing all this alternative content coming out? But as you know, these things are really high CapEx kind of experiences, and I think they're really good, and I think there's a future for them. But IMAX has 1,800 theaters sitting throughout the world, and not only do we show movies, but we show awe-inspiring experiences and alternative content, and at a much lower capital cost and entry point. So I think over time, you'll see us really benefit in terms of utilization from that diversification in content.
It's very helpful, guys. Thank you very much.
Our next question comes from David Joyce with Seaport Research Partners. David, go ahead with your question.
Thank you. The system sales revenue was up very significantly in the quarter, but system rentals were down. Do you still have basically an agnostic view as to which strategy to employ? Or is one of them quicker in the event that these theaters are looking to accelerate their being on the IMAX network?
Hi, David. I think a mix between the systems is still our strategy. However, as you look at the slate in the next few years, is there an opportunity to install more JVs and therefore get a higher return on the rental side? That is an opportunity before us. And also, when you're thinking about different countries and the operators that exist in those countries and their balance sheets, as you know, our balance sheet is very strong, and we have the ability to put up the capital for that higher return. And I think that's where we have some opportunity before us. And yes, you're going to have ebbs and flows like this quarter where the rentals revenue was lower because box office was lower. But then you have other quarters like last year's Oppenheimer, first quarter this year with Dune. Of course, we have Avatar next year and the Film for IMAX slate next year. And so I really think you got to look at it in the full portfolio approach of an annual view and look at how strong the rentals revenue can perform for us and really give us that outperformance and incrementality in the model.
Great. Thank you.
Stand by for our next question. Our next question comes from Patrick Scholl with Barrington Research. Patrick, please go ahead with your question.
Hi, good afternoon. I just had a question on new screen installations. I was wondering if there's any sort of lag between a new screen install and getting to a ramp up in box office. I was wondering if there's any differences across countries.
There actually is, we've done some research into how quickly things ramp up, because obviously when you first open, there's some opening kind of publicity around it, and there is a seasoning period for theaters between when they open and when they hit their point, but they're widely differentiated in parts of the world and, even within territories, what the particular locations are. So we have it and we look at it, but frankly, there are no meaningful trends that I can give you other than to say that, when things open, it takes a little while until they hit their peak performance.
Okay. Have you noticed that time frame shortening after the pandemic?
We haven't really done research in that direction, so I can't say. But, I could certainly say when people open around a major movie, at a time like that, so many people see it, that it really accelerates the word of mouth and shortens it. So I'm hoping, as we're in the fourth quarter and next year, all the promising content, that period will get shorter, but I haven't studied it empirically.
Okay, thank you.
Our next question comes from Stephen Laszczyk with Goldman Sachs. Stephen, go ahead with your question.
Hey, great. Thanks for taking the question. Two, if I could. First, on local language, maybe for Rich, could you update us on the medium-term outlook for the local language film supply? What are you hearing from some of your key partners out in some of those key international markets in terms of their production plans? Where do you see film supply today in some of those markets, and where do you think it can get to over the next few years? And then second, maybe on CapEx for Natasha. I think gross CapEx came in around $12 million in the quarter. I think you mentioned the install calendar being a little back and weighted with 4Q. Any more context you could add on 4Q growth CapEx, and then perhaps anything on 25 as we think about you executing against the installation pipeline next year? Thank you.
So, Stephen, as you know, last year was around local language was around 20% of our total box office. This year it's marginally lower, but in the same kind of ballpark. And my guess is the reason it's a little bit lower is because the Chinese box office was somewhat more challenged this year. And again, as we go into next year, where we expect a more robust Chinese box office, I would think it would settle around that 20% level or higher. There's a lot of activity going on with studios and filmmakers from around the world, and we continue to have new countries opening up. So, I think I might have mentioned in my speech, but we had this film called I Am Hero in Korea, concert film, which did exceptionally well. And I think when you have kind of those new territories and the new one-offs, they really boost the amount of inquiries that comes in. We're in France now. We're working on actually an original production that's likely to be released only in IMAX and then elsewhere. So I really don't feel better or worse for it. I think it'll continue its trend. So in 1919, I'm guessing, but I think it was less than half what it was as a percentage, Stephen, as it was in 23, and I think that trend will continue.
Hi, Stephen. On the CapEx side, year to date, we're about 20 million for growth CapEx, and I think if you looked at historical pre-pandemic years, we range somewhere between 30 to 40 million historically, and I think that's where the opportunity is, that we do have the strong balance sheet that I talked about earlier, and the ability to get higher returns as well, especially when you look at the slate as it stands right now. And so we do have the ability to do that. The other part is as we look out towards next year, if you looked at historical patterns of installations, we generally have a historical mix of about 50-50. We've stayed pretty strong to that. But there are years that could weigh more heavily to JV CapEx. It really depends on who we're rolling out with from an exhibitor side, which locations or countries, geographic places in the world, and the ability to look at where do we want to spend our dollars. And I know we've had this conversation before, but it's about where's the place you want to spend your dollar? Is it in a region that can give you a higher per screen average or a lower? And what do you focus on? And so our teams, and we've talked about our theater team, they do a bi-weekly call. They really think through and plan it out as much as they can to be able to say what's going to give us the most return, and try and work with exhibitors to push those forward. And I think that's where we've delivered, and we continue to, and I'm confident we'll continue.
Great. Thank you both.
Our next question comes from Mike Hickey with The Benchmark Company. Mike, go ahead with your question.
Hey, thank you. Hey, Rich, Natasha, Jennifer, great quarter, guys. Thanks for taking our questions. Just Natasha, Rich, just clarification on your 25 guide. I think it's pretty much exactly the same, but you threw in the 1.2 billion. Natasha, was that your original assumption when you guided revenue growth to be high single digit in 2025, or has that changed?
Hi, Mike. We actually didn't give out a guide for next year's box office. When we did the look-through guidance earlier this year, we just commented on high single digits for revenue growth. And so that revenue growth was based on a holistic view of our entire P&L, and I think that's where we look at the different levers. And right now, we feel confident in giving out the $1.2 billion. And I'm sure that at a later date, we'll come back with other guidance metrics as we do each year.
Okay, great. I guess the next question, Rich, more superhero fatigue. I don't know how many times you've probably heard that, but it sort of popped up here again recently. And I know Avengers and other sort of superhero fanboy film experiences have been important and will be important when you think about growth in 26 and 27. So how are you thinking about that genre, I guess, in particular, and what offsets you have if it is weaker than it has been historically?
I mean, when you look at our schedule for the next 2 years, what's been announced so far, you have Dune 3, you have the new Christopher Nolan movie, you have Formula One. None of those involve superheroes except for the directors, who are all superheroes. But I just think you have our alternative content, local language. I don't think we're overemphasizing superheroes, and I think the death of the superhero and fatigue has already been proven wrong. You look at Deadpool and how well that did. I think what caused the previous superhero fatigue was probably streaming, which contributed so much content, along with the movies that were coming out at that time. The market was flooded with content. But I think the slate is really well balanced going forward. And, I've spent a lot of time with our studio partners and our filmmakers, and, going in to our forecast going forward, and our optimism is I think these films are going to perform extremely well. There's always one or two that don't work because it's the movie business and not everything works. But I don't believe there's superhero fatigue right now. I mean, as a matter of fact, let's go in to Thanksgiving, where I'm incredibly, optimistic, where you have, Wicked and Moana, and you have Gladiator, and none of those are superheroes. And unless Mufasa flies or something, I don't think he's a superhero either. So I just don't think I don't think it's a real issue.
Nice. Rich, real quick, you mentioned Christopher Nolan's going to get some new tech. Are those the new cameras that are now sort of going out into the field, or is that something else?
I think we're going to have to wait until he wants to talk about it.
Okay. Thanks, Rich. Take care, guys.
All right. Thank you.
This concludes the question and answer session. I would now like to turn it over to Rich Galfond for closing remarks.
I don't have a lot to say other than I think the quarter really demonstrated something we talk about all the time, which is revenue diversification. We're diversified around the world in sources of revenues. So, China didn't have a great third quarter, but North America had a really good third quarter. I think we talk about diversification in terms of different kinds of content coming in. So some things that perform very well are in the mix, or League of Legends, the Olympics, all kinds of different music content. Our documentary, Blue Angels, was very successful for us this year. So I think, that's another kind of diversification. And I think throughout that, our brand continues to gain resonance, and our market share generally keeps going up, and our indexing does very well. So I feel really good about it. And as I've said too many times, 25 and 26 look really strong. So, I think this quarter, and it's the spotlight on diversification also, I'd say installs, high number of installs. There's lots of ways we're diversified. So I think the more people understand about our company and the revenue sources, the more people will understand our growth story. Anyway, thank you.
Thank you for your participation in today's conference. This does conclude the program. You may now disconnect.
Gotta turn this music off. Where is it? Where is it? I can't find the damn music to turn it off. Where's that tab? All right, it disconnected itself. Woo. All right, let's talk about that spreadsheet real quick. So at the beginning of the quarter, or sometimes earlier if I have time, I go through and look at all of my resources and try and come up with, on this column B, what is, if every movie hit my expectations, what would the total box office domestic be? Yeah, that number, it does say 3.1 billion, but not every movie is going to hit 100% of what I guess. Some will do less, like Joker is doing less. Piece by Piece, the Pharrell Lego movie, is doing less. So you don't go by this number. That's not my official guess. You got to downrate that. And then if some of them beat, like if Wicked beats Craven is hard to guess. The Lord of the Rings is hard to guess. I could be way too high on these two movies. So my official number, where I feel comfortable telling you guys, is 2.5 billion, maybe 2.7. And then maybe if some of these movies outperform, we get a beat on that. And I'd love to have a beat on my official guess. But I think we got a shot of sneaking in a profitable Q4 for AMC. So that's, I track the actual in this column C. And if it's red, that means it's not going to meet my estimate. If it's green, that means it beat my estimate. Like at Terrifier, I had Terrifier 3 at 18 million, and it's already done over 45 million. And then we have all of these up here from Q3. God damn it! Fucking music again. We have all these from Q3 that are still adding income into Q4. So I don't know how to turn that damn music off. Hopefully you guys cannot hear it. For those that were joining late, we talked about IMAX and Cinemark price action versus AMC. I just want to kind of close talking about that one more time. Oh, here's the tab that has music. All right, got that closed. I know there are a lot of people doing valuation guesses and analysis and forecasts for price for you guys for AMC for 2025 into 2026. And my model is keep it simple. Keep it simple. Price to earnings ratio. And no, we should not look at trailing 12 months price to earnings ratio. We can't go to IMAX and say they had a 50 trailing 12 months price to earnings ratio. Therefore, AMC should be 50 times. Look at your forward earnings, because hopefully you guys know how this works. The analysts and the companies will give us expectations for the next 12 months earnings. And then, as you've seen with IMAX and Cinemark, the price goes up to give you a forward PE ratio in our industry of 20 to 25 those earnings. So IMAX right now is at 21x the anticipated next 12 months earnings. So that's right in line with where IMAX, where this industry typically values companies, 20 to 25. Should not be looking at price to sales. That's a red herring that is going to give you a false expectation of AMC's price. You should not look at trailing 12 months earnings. If you want to do some forecasting, look at forward earnings, forward PE ratio of IMAX and Cinemark. They're both between 20 and 25. IMAX is, Cinemark is what? At, what do you know, 21. So their prices went up because their earnings expectations went up. AMC, and people always ask me, what's your price target for AMC? It's going to be 20 to 25, the forward earnings, but we don't have a positive earnings forecast that we can take to the bank yet. So I have modeled 2025 and 2026 earnings for AMC, but we need a little more clarity on box office. You can throw me a number and I can show you what it would be. Maybe we'll do that on tonight's live stream, but let's just use a number of 75 cents positive earnings or $1. If all goes spectacular, and let's say 2026, a $1 positive earnings, if the box office is big enough, times a PE ratio of 20 to 25 would give you a price target for AMC of $20 to $25. So for those of us that appear overly bullish, you guys are too excited. If AMC gets profitable on better box office, you could no one could argue this. I'm just using regular PE ratios from the industry. And I already have a model that shows we could fall in that range of 75 cents to $1. Let's just be conservative. Let's say 75 cents. A price target far above where we're at is not out of the question. But we got to get there. Got to get there, and we got to fix company. When I say we, company has to fix the balance sheet. So between now and then, you got to just keep in the back of your mind that the company has told us every quarter for the last 3 years that they're going to continue to repair the balance sheet. So debt for equity swaps, convertible notes, there's some dilution risk overhang on AMC. And so that is what we got to worry about until we get to the point where there are positive earnings. So just keep your feet on the ground. I know your head's in the clouds. I'm looking forward to the day where AMC has a year where the entire year is positive. I think that is in their future, but we got to get there, and they gotta keep on repairing that balance sheet. Preston says, do you think IMAX and Cinemark earnings could put pressure on AMC for a good result? No. I think people are judging them in their own little silo. Here's what I do think. If AMC is able to book a positive earnings for Q3, like I expect that they will, and then if Q4 is big enough where we have another positive earnings, then we start looking at the next 2 quarters after that, Q1 and Q2. Are those going to be positive or negative? Are they going to be, if they're negative, if Q1's negative, is it going to wash out the positive earnings from Q3 and Q4? I don't know that I have all those answers. Q1's a tough one to call right now. It's not looking super great, but it's not a full slate yet either. We have very little visibility into Q1 on the total box office. Yeah, we know the IMAX movie, but the calendar is still pretty sparse for Q1. I will be streaming Cinemark Jeffrey, yes, tomorrow afternoon. And we'll probably do a live stream hangout tonight if we're not going to a movie. I still want to, still need to take the wife to see, what's that movie? We Live in Time or something like that. And we still have not seen Venom 3. I was surprised. My wife watched Venom 1 and Venom 2 with me. I had never seen them. Not my preferred movie. But we watched them at home over the past week, and she really likes Venom. So she's actually excited to go see Venom 3. But getting back to IMAX and Cinemark versus AMC, do not try to compare them yet, because as far as earnings go, not in the same category yet. As box office grows and AMC starts posting positive earnings, then we can calculate a price target. We had, what, 20 cents positive earnings for the year. That's 20 cents. Times a PE ratio of 21 like IMAX or Cinemark. That gets us right where we're at, right around here. 420, 450 with a 25 PE. If they had 40 cents positive earnings for the year, that would be an $8 price target. So those are the things I'm going to be looking at and, trying to forecast for you guys as we wrap up this year. Later towards the end of this year, as we wrap up Q4 and we see how it comes in, and then maybe get some more visibility into doing some forecasting for 2025. Can we get a profitable year for the year? You could see AMC's price without any squeeze, without any Roaring Kitty hype. It's not a stretch to say it could be a $7 or $8 stock. But all that's going to depend on box office, and I don't have 100% certainty on where we're going to be for box office in 2025. We're all quite certain 2026 is going to be good. And we just heard IMAX say they're forecasting a 20% increase on 2025 versus 2023. So we'll see where they finish up 2024. All right, I've got to go check in on some different tickers, and like I said, we'll try and do a live stream tonight. As we're wrapping up here, AMC is flat. GameStop is down 1.5%. DJT got spanked today, down to $40. It's down another 5%. I know some of y'all were playing that. I hope took some profits at least. I saw a lot of people were making money on that. Beautiful. But don't be greedy, guys. Remember the financials of that company are not in good shape. So if you're given a blessing, take the damn blessing. Take some profits off the table. I know people want to hold it all the way till the election, and Maybe it'll run up if Trump wins. Maybe it'll run up again. But the financials over time of that company are going to weigh stock price down. So take your blessings when the market hands them to you. Thanks for hanging out. We'll see y'all tomorrow for Cinemark, maybe tonight for a live stream, and then the AMC one obviously is scheduled for November 6th. So have a good afternoon, guys, and we will see you soon.
So you wanna go to war with me? You're talking like you think you're royalty. You think that I'm afraid, but I don't break. I heard you question my stability.